let's have a quick conversation about profit targets. I'm looking at a chart of Ballcorp, BLL, recent off of our scouting reports. And it's got a nice little pullback right now. And I'm looking at that little pullback and I'm asking myself, well, I think that this is in that pattern of higher highs and higher lows, and it's done a little pullback here. It's the moving averages, and I think the price can rise. The question would be, how much will the price rise, and at what point should I take a profit? At what price, should I target? So really what a price target is, it's a profit target. So I'm going to zoom in on this a little bit. So it's been a pretty good upward trending stock. And we've got good overhead, potential. Like we can see the price, rising up. And then again, it becomes a question of how much for that profit target. So we'll put a little target out there, try to hit that bullseye. Well, what most traders are going to do is they're going to study all this data back here, everything from today backwards, to give them an idea of how much the stock moves, what's typical deviations in price, what would be a realistic expectation. It's a function of price over time. That's a clock, by the way. Price over time and how long the target takes. Now, if you're a short-term, day trader, like a day trader can only target what's statistically likely. That stock moves on average $1.21 per day. It doesn't mean it can't move more. It doesn't mean it won't move less. But that's the statistical average. So expecting it to move more than $1.21 per day, it's not a realistic expectation. It doesn't mean, again, it won't. Some days you get much bigger, above average days. Like you'll look across here and like, oh, you big, huge above average day on high volume. Occasionally you get really big candles and you see more than a typical move. But the average is 121. So a day trader, that's their built-in expectancy. So a day trader would be in here looking at, an intraday chart down here on, say, intraday time frame, like 15-minute chart, and saying, well, I think it can rise up, in that dollar ballpark, $1.21 out here. And that would be a reasonable profit target for a day trader. For a swing trader, they would look at, previous swings and say, well, this one here went from 57 up to 65. So that one went about 9 points. Here we went from, let's measure the low. It went from the low of 59 up to 66. So that one went 7 points. And here it went, from this low to this high. It went from 64 to 72. And that is 8 points. And so, hey, the last few runs, 8's the average. So it might be realistic to expect it to go from here at 70 up to 78. So a high-end target would be 78, and you'd put a sell limit order out there at that price to sell as soon as it gets out to 78. Now, other traders will let the profits run and just trail the stop losses. But if you're looking to take profits consistently, pre-setting that sell order out there, a sell limit at a profit target. Now that's that would be an optimal profit target. Can help you take profits automatically. And good swing traders will usually use profit targets at least to scale out at a minimum, where they take some money off the table or adjust their stop losses up to break even. But a target is just a realistic profit objective where we can place an order or an alert to help us remember to take a profit or to automate the process. And the step system uses a 2-target method where it'll look for a highly probable target, like a known resistance, or a big price level like 75, and they'll set a profit target that's more probable, and then we'll also look for that optimized profit target out there. And a lot of times traders will, as soon as they hit their first target, they'll scale out, lock in some gains, reduce their risk, and then let the rest of the position run for the optimal target. Set profits, take the money and run. You'll never meet a broke trader who learns to take a profit.